Hello, hello, hello. Good afternoon. Welcome to another ES Futures trading stream. Today is Sunday, August 20th. It is 4:34 Eastern Time in the US. Okay, let's take a look. There is something going on, or there was something going on in this market that was very important last week. Now, let's check. There is change in this market. This is the monthly time frame, this is the weekly, and this is the daily. Here all together. The monthly the monthly time frame is always the last one that is going to reflect change. If anything, if there is a change in the market, the monthly is always the last one to have was going to reflect change. We can see we were following the market all this, and the current contract, the one that expires on September, started here. And we have this big movement. Let me change this to the daily. Oh, I guess I can make it, I can maximize this cell here. We got this pain trade that was being talked on the media for a long time. And when the current contract started, the market just break about from this. I guess this is June 22. Sure, just a second. Okay, I'm back. We we got this pain, what is called the pain trade that has. Oh yeah, hey man, what's up? Yeah. I guess you'll find it. All right, we were talking. Well, I was talking about this the pain trade that happened here. On the current contract that started here. This is the. Let's check the current contract here. This is not a gap here. This is not a gap, but we can see the multiple gaps the market has had in the daily, and with an incredible breakout here, and all this buying that happened here was very questionable. It has low volume, very mechanical references, mechanical pullbacks, mechanical breaks. This is the technical dream, the dream of technical traders here. And as a consequence of this, all this long inventory, remember, this is this is June, I believe, June 9. This is when the new contract started. All this long inventory now is gone. All this long inventory has been cleared. And we were talking how we were talking about the two distributions. There was a range here, if you remember. There was a range here. This is a 4-week range in the weekly time frame. Now, when the market re-entered this range, the destination or the potential destination of that trade is the opposite side of that range. That's the weekly. And in the daily, we have the market re-entering please first taking the 4500. Very mechanical trading here. We got the 4500 until the 50 moving average is down here. I don't pay too much attention to this, but traders know what this moving average is. As soon as they get close to that, it just break. But the main thing here, is context, right? Up to this point, the monthly was an inside bar. Not just an inside bar, pretty much was a balance, 2-month balance here. And the potential destination, when the market reached to the 4,500, that was a go, no-go level right there. If this level was going to break, the potential destination is the opposite side of the range, of this range. As we say, you got the 4-week range here, and another some 4-day range here. When the market took the 4,500, that was the trade here. There was a big breakout this June 16, I believe, the same reference that I have here. And this is rare, right? This is the second time I see this happen. We talk about that. It is the second time I saw this happen in the last 2 years. If I remember well, I guess the first time was, come on. I guess it was here, somewhere in here or down here. I don't remember well last year when all time frames get in sync. And it was, the 200 was very close. And the 200 is more relevant than the 50. Now, it is impressive, just to say the least, that how markets, once the market re-enters a range, this 4-week range here, this is a 22, 23-day range here. Once the market re-enters the range, it seems very hard, almost impossible to believe that the market is going to reach the opposite side of that range. But somehow, one way or another, the market just travels to the opposite side of this range. Now, the range has, the opposite side of the range has been reached. We can say now that this trade has been completed. And now, what can happen here is, we are never going to trade thinking what is going to happen, but our mindset has to be in what is happening in the market, right? But it's not unusual. It's not unusual that after a break like this, there is some sideways trading here or some rebalancing of inventory before the market continues its ways down. Now, the balance guidelines says that once we reach the opposite side of the range, 2 things can happen from here. The market can look below. The market's right there. It's right there at the low. Can you see it here? Right? It's right there at the low. This low is not good. This low is not good. All time frames are in sync now. All time frames. And what can happen here is the market can look below and can be bought, right? Because what was 4,500 here, now we have the 4,300. I don't think this, this can be support as well, but it has happened here before, it may happen here again, but the thing here now is the inventory. This market is just too short now. We had a lot of longs with a lot of very questionable longs here, and all those longs are being removed. And the inventory is very short now at this moment in time. Granted is that this low is weak, this low is questionable, this is weak as well, this is very questionable, and this one is questionable as well. And on top of that, we have the 100. This is a more, traders see this one, but this contract, let's use another chart here. I'm going to use the current contract, and you will see that in the current contract, the market is just right there. Look at where it has been bought, you know, almost to the tick here. Who buys there? That's the question. Who buys here? Who buys from those mechanical levels? 43.50, 43.50. And what can happen here, the market was bought here, it may bought another time. The same thing that happened with the previous resistance. Once the market reaches that level, it can come back and forth through that level until, if it comes back too many times, the odds that level is going to fall are high. Now, the weekly, we can see the 4-week range has been reached. The opposite side of that range has been reached. We are right at support in the monthly as well. Balance guidelines. Let's take a look now. Let's zoom in a little bit more here and check market profiles here. At this moment in time, traders, you can see that traders are buying the dips. They keep buying the dips. Die hard. Habits just die hard here. Once you are used to do something, you will keep doing that over and over again. And finally, just let me go back to the daily charts. Now, traders have seen this market going lower and lower and lower and lower and lower and lower. And finally, the traders start to understand, there's changing here. The market everybody can see now the market is going lower. Everybody can see the market. No, now it's time to sell, okay? And you can see the selling that happened here. Look at us. This day was hard to me to trade. I'm going to open the preview these 2 days here and this one as well. I will see something really interesting here. Now this is why I say the overall inventory is very, very short. We have, starting from this day, this is the 14th. The 14th is Monday. Now, high is pretty much, it was sold from, I cannot say it was sold from the POC, but very close to POC. We got a monthly break here, 4-week range high, the monthly break here. And look at what happened here. This is the next day. The first rally high is right at the high of the upper distribution. That's one, okay? That's why I have this gray mark here. The next day, look at where's POC. Can you see this POC here? You have 3, 6, 9, no, whatever. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 white. And look at how this POC is, you can see this, right? You can see, traders can see this POC here. And notice where the market has been sold, as close as possible to POC. How many times? 1, 2, 3, 4 times, okay? There's no excess here. This is poor and weak at the same time. Very, very questionable high. Regardless, the market keep breaking, right? The next day, no, I'm going to open this again. This is something I want to highlight. I started to notice this happening here in this day. If the market is really weak as price is advertising, the market will form a second distribution. We can see here there's a distribution here, starting to form an F. But G, H, and especially K, this is just close the distributions here. If there is something serious to the downside, the market will not close the distributions. That's one thing. The next day, the market opens. At the open, it closed the previous day distributions. And again, how many times have been solved from a mechanical reference? 1, 2, 3, 4, 5 times here. And now we have a very emotional day here. Notice that this is a 2 ticks interval here. Right? The market, the range is just too high. I had to do 2 ticks interval here. We have 1 distribution, 2 distributions, 3 distributions here. And the next day, which is Friday, when I started, this is something that I think this is a nuance now. All right, let's check this one. This is what I observed on Friday, which is, I think, is very important. Notice how the volume, how high the volume is in the first 2 periods. It decreases as the session gets close to the end, and it starts. This is about 20% higher. Uh-oh. Look at how it starts, 20% higher. And then 10, 8, all the way down to negative. You know, the day ends, I mean, the actual volume of the market is lower than the previous day. That's relevant here. That's what I thought at the opening, that this is more, let me add here so you can see. Let me add the overnight profile here. Sale was down here, was down here. Inventory was short, mostly short, right? With again double distribution here, with a big gap. You know, that was the main thing that we were watching here. You know, the focus was the gap. If the gap is going to be closed, I mean, multiple things happen here. Remember, what we talk about this on Friday is the market was very close to reaching the four-week range low. Okay, that was, remember, that was the ultimate destination of this trade here. Not just that, the 100 also was right there. You can see these things in the overnight. It was right there. I have this market on Friday before the opening. You know, now the direction of the overnight session was to the downside. It was Friday. When the market opened, takes this, I mean, this is just look below, and this is you can see a rejection here. It don't even reach the 100. There's a huge amount of volume here. You know, when this market prints that amount over almost 20% higher than the previous day, that told me, oh, okay, this is more than a counteraction to overnight inventory here. The inside bar that we have after was very important as well. Okay, what are the trade guidelines regarding inside bars? Go with the break of the inside bar. Okay, we have multiple things here. We had multiple things on Friday. We have a gap. We have a potential destination trade being reached. We have overnight inventory being short. So multiple pieces of information that we have to deal with and make decisions really fast. I couldn't take nothing here, right? But when the market print this inside bar and the break was to the upside, okay, this was a long here, and you can see here how traders now that they say, they see the market breaking, they finally understand. Okay, this market is going to the downside. It's time to sell. Right? The main thing that I have from yesterday is remembering what happened here, remember what happened here, and what happened here as well. If the market is as weak as price advertises, the market is not going to come back inside previous day range. The market is not going to close the gap. I know, but notice how this trade is back and forth, back and forth, back and forth through this. A weak market doesn't do that. A strong market doesn't do that. Now, if the market is going to go to the upside, this is just going to keep going higher, higher. Maybe check once and say never come out. And after all the movement we have on Friday, notice where the market closes. This is Thursday, settle, or down. Yeah, this is Thursday, settle. Notice where settle is on Friday. Pretty much the same, right? I don't need this anymore. Whereas Thursday last, down here, right at the very low. And where is last on Friday? Right there. After all the movement that we have on Friday, the market didn't do anything. Right? Now, the thing here is now, what can happen here? I am not going to go ahead and forecast anything, because the first thing I have to do is acknowledge any bias that I might have. And I know that I am going to have the better odds are going to be if I am neutral as possible. If I have any bias, I have to acknowledge and use market generated information to fight that. The odds for me that this market may have some sideways trading are high. Now, what do we have? What do we have for the week here? Let's check. Where is my? Where are you? Where is? Okay, here it is. What do we have for the next week? Next week, let me check this. I need to screenshot this. As important piece of information here. Okay, this is. I guess this is the most important thing for the week that this is starting. You have jobless claims. This is the weekly jobless claims. This is what bigger trading money, bigger time frame trading money sees. We have composite flash as well. This is not that much. Okay, that's one. Let me add that to my homework. These are my notes here. These are my notes. Where it is? Where are you? Okay. I have this for the current week. And the other thing is, I think that something, the market is so obsessed with this AI thing. Man, I hate this. I hate that what Twitter did here. they just removed the deck, but I'm not going to. I'm not going to pay it for a deck here. Okay, what it is tweak deck? This is what used to be. Where it is? Illinois Whispers. Here it is. I have it. Where are you? Hey, here it is. This is the most relevant earnings for the week that is starting. I don't need you. You come on down here. Come on. What? Oh, what do we have here? Let me do that again. I messed this up. Okay. We have Nvidia. Just because the market did the last quarter, they reported how lows here. Anything interesting? There's nothing else. Mainly this thing. And let me save it. Let me save this now. Also, going back to this, I guess Jackson Hole, the Jackson Hole meeting, I'm not sure it's Thursday. For what I see here, I guess it's Friday. I thought it was Thursday. Okay. Pay attention to that. That's going to be very important. I think it's Friday because usually, yeah, it is. It is Friday. I mean, it is Thursday and Friday, and the Chairman Powell's speech, I guess what he does is his speech closes the meeting. This is going to be very important, and it happens on Friday. So we have Wednesday and Friday as a relevant. Oh, look at it. There's nothing on Friday here. Okay, there's nothing scheduled. This is Jackson Hole meeting on Friday. It's going to be. I think there's not going to be nothing more relevant than that. Those 2 days are important. I think are going to be relevant. And what can happen here? This inventory is just extremely short here. All of the contract is short. Okay, we have downside extension, acceleration to the downside. Everything that could happen has happened. The thing, what I think is very concerning to me is I have started to see just too many mechanical trading here. The way how the market closed on Friday with this gigantic rally here. I think I need to call this. I need to call this base a spike. I want to call this spike base here. This is a 15 spike. This is the first spike to the upside we have. The market, if the market opens below the base of the spike somewhere in here, it just means there is a rejection of higher prices. I don't like the high though. Look at what this high is. Right at the high, just one tick from the lower distribution. This is a very mechanical high, and the 4400 is right there. I was on the buying side on Friday, but boy, that was really hard. It was really hard. There was this break here. This break here was, I was really nervous on this break. But when the buy, you can see here, the selling just stopped here. There was a really, really, really fast long liquidation here, and it just stops there. I was waiting for this high to clear. Well, the market couldn't get, I was really tired. That's why the market couldn't get to this high in edge. I just closed my positions here. And this is what I was expecting, some kind of spike to the upside to take this, because when these highs are clear, but this is not that much. I thought there was something there. Now, let's put things in context now. Because market generated information without context is worthless. One time frame lower has started in the bigger time frame. There is change in the bigger time frame. Now, all of these ranges, the daily, the weekly, have been traded through. Now we have a really, really big range in the monthly, which is 13-month range. And this could take some time to take. Remember, this is a monthly time frame. It takes months to develop. Right? If there's a trade here, it will take months to develop. Yeah, the daily is faster, the weekly a little bit slower, and the monthly takes more time. Pretty much how many weeks we have to go? 3 or 4, kind of like 3 or 4 weeks to go. The market is just where it started here. This is the current contract. All inventory is extremely short. I think that the risk of being short in this market is very high now. Very high. There can still be some downside here because the low is very mechanical, but this high are, those are the fierce red flags on this trade. Don't try to upfront any kind of movement here. My biggest losses were when I may have information that's telling me that this market is too short, but the market is in long liquidation mode now. Inventory is very short. I know it's very short, but it doesn't mean that it's going to correct right now. Momentum is a force that can take the market to extremely long distance before it ends. And there is nothing, right? There is nothing that tells us that the momentum is over. Right now, the momentum is to the downside. If I'm going to be long, I understand that's risky because can you see the trend here? There's a trend to the downside. The trend is your friend. Don't fight the trend. Don't fight the trend. I may have been wrong here, buying something here, but if we put things in context, you can have a better day or better odds of having success in trading. Just odds. That's it. Now, to close, what I do, and I always say this, right? You need to have your own opinion. You need to develop your own opinion. Because if you blind follow somebody, you will never learn. If you have your own opinion, you can be wrong, you can be right, but if you are wrong, you just adjust. You keep adjusting until you find something that fits your trading style, that fits your personality. And remember, the three components of trading is market understanding, self-understanding, and strategy. The most important thing, I believe, and I agree with Jim with this, is self-understanding. We got to know ourselves to trade. And to close, let's check. And what I do is I use Jim Dalton as a benchmark. Whatever I think, I try to compare myself to him because he just has too much experience. More than 50 years in this business. I think this is a good thing to be. And what I do is I listen. After I do my homework, I take a look at his weekend update. And that's what I'm going to do now. Okay. First, I put myself out for accountability, and then I check Jim's market update. Okay, let's do that now. Okay, that was Jim. I mean, he's in vacation. Jen is doing the market update, but all those are words, are Jim's words. And what he's talking, I guess, when when you do your homework, and as I was, I don't do too much. I don't do too much streaming now as I used to do. And what I did, why I did the streams, why I started doing streams on Twitch is is, is because of this. If you think you know something, you should be able to put those thoughts or to put that thing that you think you know in words. If you cannot articulate your thoughts, then you don't know as much as you think you know. That's true. I proved that. I went through that road, and I started to doing streams just to test myself. Okay, do I know as much as I think I know? And it was very hard at the beginning, to articulate the thoughts. And something that happened there is when you speak, when you talk about something, when you write, and that's what I do my homework every single day. When you write something, this is my homework. When you write something, when you talk about this, you actually are using your, part of your brain to store information there. And that information there becomes available, and it can become very relevant at any given moment in time. We don't know when, right? But once you talk or once you write, it is there for when it's ready. And the thing is, can I make this second nature? That's the thing. But when Twitch helped me in that part. The next thing is something that I have noticed is now it's getting in the way, actually, because you cannot do two things. Doesn't matter how much multitasking thing you can do. You can, nobody can do two, three things at the same time. We can focus on in one thing. We may be doing multiple things, but we are focusing on just one thing, And trading requires a lot of focus, Now the stream is getting in the way. That's why I don't do that much. I post some tweets. And when you start to doing your homework, you start to see things. First, I try to compare my homework to Jim's, and there's a moment that you start to actually see things. All right, you start to see things at the same time that he's the same observation that he has. You also having the same observations. I think that's the goal. That was fun, and I got Thinkorswim, I got SMBC. You can hear, the last couple 2 or 3 weeks, how China, the Chinese economy has been, is in the talks. How the weakening of the Chinese economy is just, it may have some impact in the markets. You got that thing. Evergrande again is filing for bankruptcy, chapter 15, 14, I don't know, whatever, is filing for bankruptcy. It's contracting. And that can affect the rest of the world. That can affect also the US. And another important thing, just to close, look at what's happening in the bond market here. This is the 10, and this is the 30. How close the market is to these historical lows here. Why I'm watching this is, the closer it gets to this, the nervous, this can drag the market lower as well. How much low now? There's been a lot of selling happening lately, but it's getting close to this level. If this level is being bought, or if this low holds, this is 2022 lows, if this level holds, there could be some pickup here. What I don't like from the market profiles, from the charts, from the current market, is the high. We have a market high, and the high was made in the overnight. That's a nuance. We have a gap. In the upper side, and how the selling was being very mechanical. It doesn't mean I'm going to be long. What I think is the market is getting too short, and some rebalancing may be in the odds here. We have some good odds of rebalancing, the market trading sideways. before the market either continues, if march to the downside, or bouncing from the 100. There was no institutional buying here because of the low volume that we have seen when the market was going higher here. And something very important, that's why I like Jim's market update. You always are learning new things. The thing that I have learned today, for example, did you hear that bigger institutional money, start to get nervous when the market, in this case, sells for about 7-10%. How much do we have here, for example? This is, let's check this one. That I didn't know. 46.33 high, current low, let's call it 43, 46, minus 43, 46, divided by 46.33, 6%. We are very close to that thing, right? 7-10%. Why that can be an important piece of information? Because in this market, what is 7% of this? That's another thing, right? Let's call it 8%, okay? So to be in the center, 46.33 times 0.08, 8.5, 393 minus 46.33. That's 4,200. Ooh, market has to come all the way down to here. Take the 50, and in this area, you may think, okay, this market is too low now. Come on, it's time. This market is time. It's time to break. What may happen is we have this big institutional money here that they are not affected, but this selling. This is seen as a healthy pullback. But if we start trading below this area, they will start getting nervous, and we can have some acceleration here. Because remember, what we have below is the structure below is terrible. That's really bad. Very, very, very questionable low that we have in the market. Look at this lows here: 1, 2, 3, 4 lows together. Gap here, firecracker potential here, both from the 50. Gap here, 1, 2, 3, 4 buys here. And another 50 here, another 50 here, another 50 here, another gap here, another 100 and 200. So here, the structure below is terrible, and that's very questionable market here we have here. That's what I can highlight from today's weekend update, Jim's weekend update. That little piece of information. Traders or institutional money can become nervous when the pullback is between 7 and 10%. Become nervous. Okay, doesn't mean they are going to sell, although they are selling. Just okay, I'm getting nervous. Right. In the same way, I guess if you have, in my case, gosh, man, I got this pullback, This kind of pullbacks really scare the hell out of traders here. The same way as when was that? I guess we have it here. We talk about this rally high here. Scare the hell out of traders. Make it double yourself here. We all go through that. We as a retail trading and bigger money as well. Okay, that was it for today. I hope this helped. If I can, I will do some market update tomorrow, as usual. And if I can as well, I will be posting some tweets if it's possible. Okay, I hope it helps. Any question or any comments? This is my Twitter. Let me see. I don't use this. How do you know your profile? Oh, come on. Okay, this is it. If you need any questions you may have, just hit me here. or any comments are welcome. All right. I'll see you guys tomorrow. I wish you a good weekend, a good rest of the week. Stay safe. See you tomorrow. Bye bye.